This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Wow, what a powerful rally. The Dow closes above 24,000 for the first time as investors pile on the Wall Street bull.
Tax reform momentum. The Republican tax plan gains a supporter, pushing forward what could be the biggest revamp of America's tax code since the Reagan era.
Unsafe toys. Consumer advocates raise concerns about some popular items just in time for the holidays. Those stories and more tonight on Nightly Business Report for Thursday, November 30th.
Good evening, everyone, and welcome. The world's most recognizable stock index had one of its best days of the year. The Dow powered through 24,000, passing yet another milestone in a year that has been full of them. In fact, this is the fifth 1,000-point move in the blue chip index this year, the first time that's ever happened. Investors' enthusiasm has been driven by the prospect for tax reform, strong corporate earnings, and a growing global economy. Well, the Dow Jones Industrial Average advanced 331 points today to 24,272. The Nasdaq added 49, and the S&P 500 was up 21. And on this last day of November, the Dow logged its longest streak of monthly gains in more than 20 years. Bob Pisani has more on the Dow's run through 24,000.
It was another banner day for the stock market. Stocks roared higher on this final day of November, with the Dow smashing through the 24,000 mark to another record closing high. In fact, the Dow had its best day of the year. The buying picked up steam early in the day when Senator John McCain said he would vote to support the Senate's current tax bill, boosting its chances of passing. Small cap stocks surged to record highs. They would benefit the most from a tax break. As for the Dow, the blue chip index crossed 23,000 on an intraday basis in mid-October. And since the Dow is a price-weighted index, the higher price stocks typically have a bigger influence on the Dow's movements. And that was the case again with the Dow moving from 23 to 24,000. So higher price stocks like United Health, Boeing, 3M, Walmart, and Apple all contributed to the bulk of the gains. Those six alone accounted for more than 600 points of the Dow's 1,000-point gain from 23 to 24,000. The good news, it's a diversified group. Healthcare and industrials, retail and technology industries all represented. The one exception, Goldman Sachs, despite being the second highest priced stock in the Dow, contributed just about 20 points to the Dow's gain. Still, everybody's happy. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And as Bob just mentioned, the brightening prospects of a major tax cut, especially for corporations, contributed mightily to today's rally. Every vote counts in the Senate, of course, and today the bill did pick up a key one from Arizona's Senator John McCain. Ilan Mui is covering the day's developments from Capitol Hill. Ilan, where do things stand as of right now?
Tyler, debate is still happening on the Senate floor, but this bill does appear to be gaining momentum, especially as Senator John McCain has said that he'll be a supporter of this proposal. He put out a statement saying this legislation isn't perfect, but he does believe it brings relief to American families. Now, there could be one new wrench in Republicans' plans, and that is a new government analysis that shows the tax bill would only generate an additional $407 billion in revenues over the next decade. And that is not going to be enough to cover the $1.4 trillion cost of the Republican tax bill. And that could also prove to be a problem for someone like Senator Bob Corker of Tennessee. He is a fiscal hawk who has been on the fence on this bill, and he's been trying to work on a compromise that would lessen the blow to the deficit with Republican leadership. There are also two other senators who are undecided. They are Ron Johnson of Wisconsin and Susan Collins of Maine. But even these senators say they are still at the negotiating table, and guys, Republicans are still hoping to turn them to a yes. Back over to you.
All right, Ilan, thank you very much. Ilan Mui on Capitol Hill for a late night.
Well, as you just heard, the S&P hit an intraday record, the Dow closed at a high, and the Senate is edging closer to passing that tax reform bill. But what does all this mean for investors? Where do we expect the markets to go from here? Here to talk about that is Kevin Caron. He's the Senior Portfolio Manager at Washington Crossing Advisors. Good to see you, Kevin. Thanks for joining us.
Good to be here, Sue.
You know, it seems as though the market is kind of priced for perfection. They're convinced tax reform is going through. The economy is going to keep pushing forward. Corporate earnings are going to be great. That, to me, seems a little dangerous at this point. And we've had milestones that we've never seen before in this market. How do you feel about it?
Well, it's true. There is a point where valuations matter, but in the short run, the market has been focused on the improving growth outlook, really, that began a year and a half ago. Add to that prospects for a fiscal push, vis-a-vis maybe a tax plan coming through, and you can see why there is some optimism here that's helping to sustain the momentum for the market. But you're absolutely right. We are looking at very high valuations in several markets, and if you look at where we go from here, maybe those valuations begin to weigh on returns.
Yeah, you know, stocks feel like Bitcoin to me. They're knocking off 1,000-point markers every other day, but Bitcoin has had a turn. Let's move to next year, Kevin. I wonder what your forecast is for corporate profit growth, because that's really what underlies, doesn't it, what stocks do.
Yeah, in the long run, that is really the thing you have to focus on. And we're looking for healthy returns in terms of growth in the S&P 500 earnings per share figure, maybe around the 5-6% range, driven mostly by top-line growth, because we are seeing better investment spending globally. Capital spending is picking up. That all helps profits. But when we look at where multiples are, they're already fairly high. So you're right, earnings do have to carry the day here, and it really has to be about the top line, because profit margins are already fairly full.
You know, have to put money to work in this market. Are you still finding opportunities, because valuations are very high? And if so, where?
We're finding fewer opportunities today than we did years ago for higher rates of return. The return profile has clearly come down as the valuations have lifted and reflected all of this good news. However, you still have to invest money, and when you look around at other places to invest money, maybe long-term treasury bonds, corporate bond spreads are fairly tight. Cash returns are getting a little bit higher given the rate increases by the Fed, but they're still relatively low. So we have to put money out in quality sectors like healthcare, like consumers, and we like to see companies with very healthy balance sheets.
Because I always look on the bright side, Kevin, what happens if this tax bill doesn't happen? How much vulnerability is there in stock prices?
Well, just look at what happened today. We got some good news about perhaps it moving forward, and the market jumped. So you would have to imagine that if there was a stumbling block here and that was taken away, you could see some significant volatility on the downside if it doesn't go through.
And does the Fed matter in this whole scenario to the market? We had confirmation hearings for the new Fed chief. The economy is getting better. There's a lot of talk that we will see 3 increases in the new year. Is Wall Street paying any attention to the Fed at this point?
Well, the market is not expecting much by way of rapid rate increases from here, but the Fed has been fairly aggressive over the last year or so, despite some very dovish talk from Janet Yellen. Mm-hmm. The handoff from Janet Yellen to Mr. Powell seems to be so far a seamless one, but of course the Fed matters, and if they got very tight very quickly with rates, the market would certainly take notice.
Kevin, thanks so much for spending time with us.
Thank you.
Kevin Caron with Washington Crossing Advisors. Well, the federal government will run out of money in late March or early April. That's unless the debt ceiling is raised. The debt ceiling currently expires December 9th. The Congressional Budget Office said today that if the debt limit remains unchanged, the ability to borrow using extraordinary measures will be exhausted by this spring. If that occurs, the government could potentially default on its debt obligations.
There are also reports tonight that the House of Representatives is working on a bill to extend the funding of the government until December 22nd. That would help avert a government shutdown next week and give the chamber more time to negotiate with Democrats on a longer-term funding plan.
The world's largest oil producers have agreed to extend production cuts through next year. The price of domestic crude was little changed, but the decision may signal that OPEC is still concerned about oversupply in the market. Steve Sedgwick is in Vienna tonight.
So after all the talk of contention, all the talk of splits in the ranks, what we had is a continuation of the policy from OPEC and their non-OPEC allies, including Russia, which of course is the largest oil producer on the planet, beyond the end of the current deal, at the end of the first quarter 2018, to the whole of 2018. That means 1.8 million barrels a day of oil will be taken off the table for that entire period, and they're hoping that will continue to stabilize the market and get down inventories of the global levels, which have been way above the 5-year average. They want to get that down by another 140 million barrels before they declare success in their policy. They're very happy with the current price. In fact, they're not even worried about the advent of larger volumes of shale going onto the market, but they will be monitoring very aggressively their progress and how much progress they are making over the next 6 to 7 months. In fact, there'll be a review of the progress made on June 21st. That's the next scheduled Vienna meeting of OPEC and their non-OPEC allies. In fact, Russia and Saudi made great pains today to say there was no difference between them, there was no light between them, and that their views were perfectly aligned. This despite a lot of contention coming into this, that actually Russia was looking for some form of exit strategy. So here in Vienna, with the oil price steadily above $63 a barrel, it seems that it smiles all round. This is Steve Sedgwick for Nightly Business Report in Vienna.
Still ahead, why some in the healthcare industry are making a pledge on drug pricing. The head of the Centers for Medicare and Medicaid said that agency is considering ways to curb costs for pricing new medications. In an interview with Reuters, Seema Verma said that they are considering extending payment for extremely expensive drugs over a longer time frame. She is also studying whether to reimburse for a drug based on how well it treats the condition that it is approved for.
Well, the healthcare industry undergoing a lot of changes, also under a lot of pressure to keep those drug prices down. Industry leaders are meeting in New York this week, and that's where we find Meg Terrell tonight.
Drug pricing was top of mind today at the Forbes Healthcare Summit, an annual gathering in New York of industry executives, doctors, researchers, and investors. Biotech company Alnylam made a pledge on its pricing policies, and its first medicine hasn't even yet been approved by the FDA.
It's hard to justify drug price increases. I mean, if you get a medicine and the medicine makes an impact in patients and you price the drug appropriately and where it ought to be priced, what's the rationale for increasing the price every single year?
The pledge is to keep price increases no higher than a measure of inflation, currently about 2.2% a year. Alnylam's drug is for a rare genetic disease called ATTR amyloidosis, affecting only about 50,000 people in the world. The company won't disclose the price until the medicine is approved, but therapies for rare diseases are often priced at hundreds of thousands of dollars a year. Another factor that could affect prices, the entrance of Amazon, increasingly speculated about in the healthcare industry and on Wall Street.
I'm confident, that they're looking at the market as they should be. They look at every market that they're not in and try to evaluate things.
Express Scripts, the largest pharmacy benefits manager, is among companies whose stocks have been pressured by speculation about Amazon. But CEO Tim Wentworth said today he sees the tech giant as a potential partner, not competitor.
What they will see is the magic isn't in lowering net prices to consumers on a drug. It's getting the right drug to the consumer, helping them stay on that drug, helping them navigate the system, all things that we've built a business over 30 years to do.
Everyone acknowledges that the healthcare industry is changing. Companies are combining, including a potential deal between CVS and health insurer Aetna, and everyone is looking for ways to adapt. For Nightly Business Report, I'm Meg Terrell in New York.
And late today, there were reports that Amazon has held preliminary talks with makers of generic drugs about its potential entry into the pharmacy business. As first reported by CNBC, the talks have been with Mylan and a unit of Novartis. Amazon's plans not yet clear, but maybe about the company taking a role in drug purchasing, competing against drug distributors. Shares of Mylan did get a lift initially on the news in after-hour trading, as you see there.
Kroger's heavy discounting leads to higher sales. That's where we begin tonight's Market Focus. The supermarket giant reported stronger than expected earnings as promotions brought more customers into its stores. The company said sales were especially strong on Black Friday. Kroger sees that momentum continuing, and it is forecasting upbeat results for the holiday period. Shares rose 6% to $25.86. Same-store sales fell for the 24th consecutive quarter at Sears, but the struggling retailer narrowed its loss thanks to lower operating costs. Sears said a smaller footprint and a focus on stores that only sell appliances and mattresses could help financial performance. Shares initially rose following the news, but lost those gains, closing down 3% to $4.08. Barnes & Noble, on the other hand, saw its loss widen as fewer customers made purchases. The bookstore chain experimented with selling toys and games to improve results, but said that move didn't resonate with shoppers. The company, which also reported a drop in same-store sales, said it would redirect its focus back to books. Shares fell more than 11% to $6.90.
The arts and crafts store Michaels said its quarterly results were hurt by hurricanes. Nonetheless, the company did manage to grow sales, saying it's seeing solid momentum. The company also reported a rise in earnings, said it's confident it will deliver strong results this holiday season. Shares climbed 11% to $21.60. Well, last night we told you that Nokia was said to be in talks to buy Juniper Networks at a deal price of about $16 billion. Nokia has since denied those reports, saying it's not preparing any offer. Shares of Juniper slipped nearly 6% on the news to $27.76. Nokia shares were off a penny to $5.01. And after the bell, the cosmetics retailer Ulta reported a rise in profits and same-store sales as customers spent more in store and online. Despite the sales growth, investors weren't impressed with the company's weaker gross margins, and Ulta shares trickled down like runny mascara in the extended session. And they finished the regular day down fractionally at 221.71.
Bitcoin lost over a fifth of its value in the past 24 hours. The controversial cryptocurrency slid to about 9,000 today after hitting a record yesterday above 11,000. But despite the volatility, curiosity about Bitcoin is growing, and so are the ways that you can use it. We told you about the real estate transactions that took place using Bitcoin, though just a couple. But now, as Diana Olick reports, you can also use it to pay the rent.
If you thought paying your rent on an app was new, well, here's something newer. Pay your rent on an app with Bitcoin.
I don't know. Cryptocurrency is pretty big, but I don't know.
Hi, thanks for calling Manage Go.
It's big and getting bigger, and that's why one real estate tech company, Manage Go, is getting ahead of demand.
It's happening, and it's disruptive, and it's different, and we're the leader in this. And Manage Go is here now, and in the future we'll look back and we'll say, you know what? Look at all the people that are paying their rent with Bitcoin.
Brooklyn-based Manage Go is a tech platform that offers landlords and tenants mobile pay, rent applications, and maintenance scheduling. Now it's adding Bitcoin to the mix. The renter pays online or on the app using Bitcoin, then Manage Go converts that to dollars through Coinbase, which is a digital broker. Then the landlord gets the payment in dollars. Bitcoin is extremely volatile, so you lock in the value at the time of the payment.
It could be a different way of paying, but I don't know. I don't know if I trust it completely.
There is not much demand for it so far.
I already have a good plan. I already pay, it's automatically deducted from my bank account.
But like other new technology, that could change on a dime or a coin, probably starting with a very specific type of renter.
Somebody that maybe is in technology, somebody that's in finance, somebody that just sees this very exciting, they got in, and this makes it real that they actually can pay their rent with Bitcoin.
The developer of this new building, the Bozzuto Group, says it hasn't had any requests for Bitcoin payment, and they have over 70,000 apartment units in their portfolio. That said, the CEO said he's already heard about this and isn't closing the door on any option that might make renting more convenient. For Nightly Business Report, I'm Diana Olick in Washington.
Well, for those of you who are looking at perhaps a more traditional way to fund your home, mortgage rates moved lower in the past week. Freddie Mac reports that the average rate on the 30-year fix slipped to 3.9%. Anything below 4% is considered historically low.
Coming up, why there may be some trouble in Toyland this holiday season.
Here's a look at what to watch for tomorrow. As we reported earlier, the Senate is inching closer to voting on tax reform. If it doesn't happen tonight, it might happen tomorrow. New data will be released on how much new construction took place in October, and a look at how many cars were bought in November with the release of auto sales. That's what to watch for on Friday.
Well, the Apple Watch got its first FDA-approved medical accessory. The agency okayed an EKG monitor for the device. The band lets Apple Watch wearers check their heart activity with an embedded sensor. It can flag abnormal heart rhythms.
If you have young kids, I bet they have a list of toys that they want for the holidays. But are some of the most popular toys safe? Andrea Day tells us that consumer advocates have some concerns.
I'm listening to you.
That voice is a stranger talking through a doll.
I'm listening to you.
It's just a demo, but the Public Interest Research Group, or PIRG, is concerned that my friend Kayla could double as a spy.
If a stranger is within distance of this Bluetooth connection, then they can actually listen in on your child. They can talk to your child.
The interactive doll is already banned by German regulators, and PIRG's Mike Litt says Kayla is just the beginning.
We're already seeing that more of these Internet of Things toys are coming onto the market.
Genesis Toys, which makes my friend Kayla, did not respond to our request for comment. According to the Toy Industry Trade Group, there have been no reported incidents for the doll, but at least one consumer group has filed a complaint with the Federal Trade Commission, which regulates children's online safety.
Toy safety is the toy industry's #1 priority, and that's not just the physical safety of the toy, but the online safety of the child playing with the toy.
The Consumer Product Safety Commission, or CPSC, regulates toys.
CPSC is beginning to look into this, the Internet of Things, and what does it mean for the safety of the toy and security.
Another hot toy on the agency's radar? Fidget spinners found for sale at Target, but loaded with lead, according to tests by a CPSC accredited lab.
One of them had a whopping 33,000 parts per million of lead, which is 330 times the legal limit for lead allowed for children's products.
But get this, that fidget spinner is perfectly legal because the label says 14 and above, so CPSC toy regulations don't apply.
If fidget spinners are marketed to 12-year-olds and younger, then they do have to meet our lead standards that are very stringent for children's toys.
Lead in toys is a significant health issue. The concern, particularly with younger children, is that often toys are handled and then their hands either go in their mouth or the toy goes in their mouth, and there is no safe lead level.
According to the CPSC, this year there were no recalls for lead in kids' toys, down from 19 in 2008. Bullseye Toys, who makes the spinner sold at Target, tells us, quote, "Safety is one of our top priorities. All of our products are tested and comply with CPSC safety standards." And according to Target, while these two products comply with all CPSC guidelines for fidget spinners, based on the concerns raised, we're removing them from our assortment. Additionally, we're working closely with our vendors to ensure all of the fidget spinners carried at Target meet the CPSC's guidelines for children's products.
To protect kids from lead, make sure you check out the age on the label. And the advice most security experts have when you connect any device to the internet: change the default password. Now, some toys, like the doll Kayla, don't have a password at all, so that leaves the toy totally exposed. For a Nightly Business Report, I'm Andrea Day.
Investors did not need a fidget spinner today. Before we go, here's another look at the rally on Wall Street, fueled by the prospect for tax cuts. The Dow advanced 331 points at 24,272. NASDAQ added 49. The S&P 500 was up 21. And on this last day of November, the Dow logged its longest streak of monthly gains in more than 20 years.
Unbelievable.
Unbelievable run.
We'll see what December holds. That's Nightly Business Report for tonight. I'm Sue Herrera. We want to remind you, this is the time of year your public television station seeks your support.
I'm Tyler Matheson. We thank you for your support. Have a great evening, everybody. We'll see you tomorrow.